Hello, and welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today, we're examining a strategy called Volatility Contraction Breakout. It's a pure price action approach. No moving averages, no oscillators, just the raw shape of the candles themselves. Over the next several minutes, you'll learn how it spots the market tightening into a coil, how it draws a consolidation box, and how it reacts when price finally breaks free. Whether you're new to expert advisors or you've built a few of your own, you'll get a clear, plain English tour of the rules behind this system. Everything here is educational, so let's dive in. So what exactly does this expert advisor do? At its heart, the Volatility Contraction Breakout strategy is built on a simple market observation. Before many strong directional moves, the market tends to go quiet. Each new swing overlaps more with the last. The candles get smaller, and the range tightens into what traders often call a coil. This strategy tries to measure that quiet period using nothing but price. There are no indicators here at all, no moving averages, no relative strength index, no stochastic. Instead, the strategy compares the average size of recent candles against the average size of the candles just before them. When the recent candles are meaningfully smaller, it concludes that volatility has contracted and the market is winding up. While that contraction is happening, the strategy maps out a consolidation box. It takes the highest high and the lowest low of the bars sitting behind the most recent candle and treats those two levels as the upper and lower fences of the range. The idea is that price is being held inside this box, and the edges are where a decisive move is most likely to show itself. Because it reads only raw candle data, this approach can be applied to any market that MetaTrader 5 supports, foreign exchange pairs, indices, metals, and more, and on whatever single time frame you choose when you run it. It tends to appeal to traders who like clean, rules-based logic and who prefer structure over a screen full of indicators. As always, remember that this is educational information only, not financial advice, and that trading carries real risk, including the risk of loss. Let's walk through the exact logic the strategy follows, step by step. Everything begins on the close of a completed candle. The expert advisor waits for a new bar to form, then looks back at the candle that just finished. That just completed candle is the breakout candidate, and the entire analysis is built around it. First comes the squeeze test. The strategy calculates the average high-to-low range of the most recent group of candles, set by the contraction bar's input, which defaults to 5. It then calculates the average range of the 5 candles just before that group. If the recent average is less than or equal to the contraction factor, 80% by default, multiplied by the prior average, the market is considered contracted. In plain terms, the candles have shrunk and the coil is in place. Next, the strategy defines the consolidation box. Using the BoxLookback setting, which defaults to 20 bars, it finds the highest high and the lowest low of the bars sitting behind the breakout candle. Those become the upper and lower fences, and the distance between them is the box height. Then it checks the quality of the breakout candle itself. The body of the candle, the distance between its open and close, must be at least MinBodyPct of its full high-to-low range, 50% by default. This filters out weak, indecisive candles and favors strong, committed ones. Finally, the strategy decides on direction. For a long signal, the candle must close above the upper fence plus a buffer, and it must close higher than it opened. The buffer is BreakoutBufferPct of the box height, 5% by default, which asks price to clear the fence convincingly rather than by a whisker. A short signal is the mirror image. The candle closes below the lower fence minus the buffer and closes lower than it opened. When a signal appears, the stop loss is placed structurally at the opposite extreme of the breakout candle, the low for a long, the high for a short. The take profit is then set as a reward-to-risk multiple of that stop distance, controlled by RewardRiskRatio, which defaults to 2. The strategy holds just one position at a time, so it won't stack trades. Remember, this is educational information, not a recommendation to trade. Now let's read the actual MetaTrader 5 code on the screen, just as you'd see it inside MetaEditor. At the top are the input parameters, the dials you can turn before running the expert advisor. BoxLookback sets how many bars behind the breakout candle form the consolidation box, A larger number builds a wider, slower box. Contraction bars sets the size of each window in the squeeze test, while contraction factor decides how much the recent candles must shrink. A lower factor demands a tighter coil. BreakoutBufferPct controls how far beyond the fence price must close, and MinBodyPct sets how strong the breakout candle's body must be. Reward-risk ratio scales the take profit relative to the stop, and lots sets the order size. Below the inputs is the core signal logic. First, the code reads the open and close of the candle at shift 1. That's the just completed bar. It measures the body and the full range, and immediately returns if the body is smaller than MinBodyPct of the range, so weak candles are discarded early. Then it runs the squeeze test by calling average range twice, once for the recent window and once for the prior window. If the recent average is larger than contraction factor times the prior average, the market hasn't contracted and the code simply exits. Finally, it computes the buffer from the box height and checks direction. The value broke up is true when the close clears the box high plus the buffer and the candle is bullish. The value broke down mirrors that to the downside. If broke up is true, it calls try-enter for a long, using the candle's low as the structural stop. If broke down is true, it enters short, using the candle's high. Clean, readable, and driven entirely by price. Let's bring the logic to life on this chart. Notice the blue lines marking the upper and lower fences of the consolidation box. On the left, watch the first few candles. They're small and overlapping, each one barely moving. This is the volatility contraction the strategy is looking for. The average range has clearly shrunk compared with the candles before it, so the squeeze test is satisfied, and a tidy box has formed between the two fences. Then comes the breakout candle. It's tall and strongly bodied, and it closes decisively above the upper fence plus the buffer. That combination, a contracted market, a clean box, and a strong bullish close beyond the fence, is exactly what generates the long signal. The buy marker appears here, with the stop loss tucked just below the low of that breakout candle. From there, price pushes higher, and a couple of candles later it reaches the take profit level, set at twice the distance to the stop. That completes the long sequence. Now watch the right-hand side. Price settles down and coils again, forming a second, higher box as the candles tighten once more. This time the decisive candle is bearish. It closes firmly below the lower fence minus the buffer, and it closes lower than it opened. That produces the short signal. The sell marker appears, with the stop loss placed just above the high of that candle. Price then falls away and reaches the downside take profit, again at a reward-to-risk multiple of 2. So in both directions the recipe is identical: contraction, a box, and a strong close beyond a fence, just mirrored. Remember, this is a simplified illustration for educational purposes, and real markets rarely move this neatly. That brings us to the end of our breakdown of the volatility contraction breakout strategy. We've covered how it measures a volatility coil from raw candle ranges, how it builds a consolidation box, how it confirms a strong-bodied close beyond a fence, and how it sets a structural stop with a reward-to-risk-based target. I hope this gave you a clearer picture of how a pure price action breakout expert advisor is put together. If you found this useful, please like the video, leave a comment with the strategy you'd like analyzed next, and subscribe so you don't miss future breakdowns. You can find more strategy analyses over at www.algobot.live. And just to be clear, everything in this video is educational information only and not financial advice. Past performance does not guarantee future results. Trade responsibly.